Hello guys, let's do a review of today's price action on US100, US100 as some of you may call it. Some take it as NQ, but let's do some analysis of today's date, which is Friday 23 August. So firstly, we're gonna note our midnight open, which is this line over here, and then this shaded area over here, it is my daily fair value gap. And then upon going up towards this new day opening gap right here, we created what we call relative equal lows. Those are targets for selling opportunities. And then what we saw is that I wanted to enter a sell over here. I actually put, oh, it's on this phone. I wanted to enter sell limit orders over here because I wasn't on the charts at that time. So I just put sell limit. And then what happened is that price did not tag me. It just left me. It was this move right here. I wanted to catch this and go for those two equal lows, which is also the London session low. Initially I was right about my targets, but I missed the correct entry, and as you saw, price just went to the upside to take out some buy side before actually going to the downside. So what I sent in the group today is that I wanted to see like price go up, create a low, create a high first, then a low, and then let's something like this, or maybe this can happen also. And then I want to see take out this low and create a fair value gap upon taking out that low, and that the return to the fair value gap, I'm going to take it and go for sell side. That is my entry model. And eventually we saw that occur right over here. So the first fair value gap is this one right here. This is the first one, and then we have another fair value gap that presented a very nice entry, which is this one right here. I'm just gonna put it like that. So yeah, so that could have been an entry, and your target, the thing about the target is that it just went for these lows instead. Price, you see this low and this low, even though this low is actually lower than this low, but they are relatively equal, which automatically makes it sell side liquidity. When you see lows that are relatively equal, you will regard them as sell side liquidity. First, you see price took buy side right there, leaving sell side right here. And also don't forget the initial sell side that we had right over here. So first, this move was just to take out this sell side liquidity. I don't want to say like I was not wrong. I was wrong about the target. As you can see, if you entered sells here like I said you should, you would have been stopped out if you didn't manage your trades and actually put a stop loss on break even or somewhere into profits just to protect yourself. So you would have been stopped out eventually. Or let's say you sold there and then you saw this, it would have been very cool. But I'm gonna take it as a losing day because I know myself. I would have held the position to the London lows, the sell side liquidity that is resting below there at even it's also below the midnight open, which is this line right here. So what I want you to look at is these three new day opening gaps. So we fell short just before touching that one. It's fine, but the one that price used today was this one. You see, it went up, came back, worked at the new day opening gap, did it again here, broke below, and that's when price actually went for my sell side. There's an entry above there, but that is pretty advanced. You can't just expect yourself to be able to catch such entries at an entry level of experience. Because if we go to the daily time frame, you will notice that this is actually let me just let it load. I want to show you that on the daily time frame, that is a level that you can consider. Let's just, so if we zoom in, you see how many annotations I got? Many annotations right there. They're definitely gonna help me in the future even. So if you look at this, so this candlestick right here, it has a open, it has a close, and then there's a gap. And then on this gap, there's actually a fair value gap also. There's a literal gap, a jump between candlesticks, and a fair value gap, which is this low and this candlestick's high. But when we have a gap, we will consider that gap as part of the fair value gap. So let's just take the high, we'll put it there, and then we'll make it a straight line, and then I'll make it just blue so that you can see it on the lower time frame. As you can see, it's blue right there. So I'm gonna go back on the 1 minute time frame just so that we can all see it. Remember the color, it's blue. So that what I said right there is pretty important, I think. Oh, sorry. So you see right there, we are consolidating at the daily fair value gap high. So we are consolidating at a daily fair value gap high. That's a PDRE itself. Also, the daily fair value gap high is in line with the high of this new day opening gap. Already you want to consider some actions at that level, but I don't expect you to be able to do that because we are currently beginner level. So let's say we missed an entry here, we entered here, got stopped out after taking out these lows, and then price went for buy side, and then we returned back into the range and eventually took out our target. But I want to shift your focus into this. This is not just a level. I said it in the group that you should focus on that. I literally told you that that level is important. You should. Why is it important? Because we have overlapping like PD arrays. We have a new day opening gap and a new week opening gap at the same if I may say levels, at the same levels. So if that does not sound pretty important to you, then I don't think that you're taking this seriously. If that's not proof to you even that this shit is working, then I don't think that you should consider continuing this lesson. But you see that how a new day opening gap and a new week opening gap is really working. You saw it this week. I used it many times. I referred to it many times, and Price showed you how it uses these things. It's it's like the logic of support and resistance. Like, we're gonna expect this to happen. Like, we're gonna expect it to bounce over here. Why is it gonna bounce over here? Because it's a new day opening gap. But there are certain things we consider that you would not consider when you're trading support and resistance. You see, we're not just gonna sell it when it comes there. There's criteria that have to be met, and that's a lesson for another day. So today we're going through this price action. So let's see what opportunities was presented today. So today our target was this low, this line right here. So we're gonna look for selling opportunities. So price, let's say we sold here first, and then we got a failed position, and then we're not giving up. We're not giving up. We know that price will go down. So what are we looking for? We're looking for a simple break in market structure, and then a fair value gap. Very simple. What is a low? So you see this candlestick, this is not a low. Why? Because if you see this candlestick and this candlestick's lows, the lows, this candlestick low and this candlestick's low, they are not both above this one's low. So this is a low. Why is this a low? Because we have this, the candlestick on the left, its low is lower. It's actually higher than this candlestick's low, and then this candlestick's low is also higher than this candlestick's low. It is, you see, this is a low, this one is a low, this is not a low, this is a low, this is not a low, this is not a low, this is not a low. This one, the low is here. Here, the low is on this candlestick, not this one. This is a high, this one. This is also a high, but this one is not a high. You see, when it's a high, you want to see a low on the left and a low on the right. No. I'm switching my words up. If it's I'll just call it swing high. If it's a swing high, like this one, you want to see a high on the left and a high on the right. If it's a swing low, you want to see a low on the left and a low on the right. If it's a swing high, you want to see a high on the left and a high on the right. You getting this? So let's find a bigger example. So this is a swing high. Why is it a swing high? Because we have a low on the left and a low on the right. You see what follow the cursor. There's a high on the right and a high on the left, which makes this a swing high. So when we zoom in, every candlestick has a high and a low. Every candlestick, it has a high and a low. So when we are looking for a market structure shift, we're actually looking for a candlestick that has in this scenario, we're looking for a swing low to be broken. So we're going to look for a candlestick that has a low, yes, that has a low on the left and also a low on the right. So here, do we get a swing low? A low there, a low there. There's our swing low. we break our swing low, fair value gap. That's a fair value gap. You sell the fair value gap. Sell. Your entry would be somewhere here. Ne? I want you to focus. Your stop loss would be above the high, above these equal highs. What is this? This is liquidity. So you get stopped out. Right at your stop out, what do we see? So price comes, create a low. This is a swing low. Why? We have a low on the left and a low on the right. So you want to see a breakout. But we're not going to consider this low. Why? Because it's moving upwards. You want to see like bearish signs, or you want to like see that this thing is going to the downside. So it creates another low here. This is a swing low, this is a swing low. So once we break this swing low, we create another fair value gap. Let me just, where's the thing? So you're gonna enter your sell there, and then your stop loss is above the high. Ne? What's your target? Remember the target. We always had one target since the beginning of the day. We were targeting this low. Also, this loss target is this, and then I'm gonna shift this lesson. This lesson is gonna be actually about another thing. So we're gonna, let's say you entered a short there, you entered a sell there, as I said earlier in the group. So your sell is there, your stop loss would be right above this fair value gap, and then you would be targeting this. So here, you know, one thing that's gonna save you here is risk management and following your plan. So you take a trade here. How much do you lose? The stop loss is 22 pips. We're gonna count this number here. We're gonna count this number. So here you lose 22. Let's say dollars. You lose $22. Here you lose $50. So in total, it's $72. Two trades, two losses already. And then you see another trade. You take it. How much do you gain? 186. So you lost 72, and then with one trade you made 186. Sorry. So how much did you actually make? You made like 86 minus 72, so it's gonna be like 14. You made 114 with one trade. So you made back all those two trades, and then you up. Also, you are up with one trade. So two losses, one win, but you're already in profit. So you see, you don't need to be a winner all the time. You just need proper risk management, following your plan, and beautiful executions. Look at this. Even this can be avoided. How can you avoid this? Immediately when you take out lows like this, you must take partials. If you do not want to take partials, or your position is too small to take partials, you'll just update your stop loss to break even so that you don't lose. But guys, you see how risk management and proper stop placement would have saved you in this scenario. One trade, three trades, two losers, one winner. Overall, you're in profit. Nothing hectic. So further, that's when price comes into the PM session, and then mad respect to our new day opening gap, also our new week opening gap. You could be a buyer there. You see, you could be a buyer there, but that's it for today's review on Nasdaq. That's how I would have traded if I was on the charts today, but unfortunately I was not on the charts. If you look at this, minus 4 level, tell me it's random, -4 level. I've got some juicy stuff, my guy, some juicy stuff. Thank you for watching, and then expect another video sooner or later. Equal lows, remember equal lows. Also remember session lows and highs. Session lows and highs. This is the Asian session, this is London, and this is New York. This is the kill zone of London. I use kill zone for London. Oh, what are these? What are those? Those are equal lows, my guy. What is that? That is a stop run, a sell side run, or whatever you may call it. Bye guys, let me record another video about daily buys.